Today's video is about why I'm not buying residential real estate to rent it out to people. And if you live in a major city, most of them are really they have strict lockdowns, and the number of people who are renting is actually going down. There's incredible vacancies, even in an area like San Francisco, where it used to be very, very difficult to find an affordable apartment. They definitely have gone down quite a bit in terms of price. Now, if you're an investor, I think this is a really terrible environment to actually buy residential real estate if your goal is to just collect the rent and get the yield, because I know a lot of you want passive income. But the problem is that I think that residential real estate is a lot less predictable than any other kind of investment right now. For instance, right now, if you want to evict someone, you literally cannot. You cannot remove someone from, if they just decide not to pay rent, they don't have to. And they could be in there for quite a bit of time, actually, in California. And there's really no way to actually deal with this. I think this is an issue across the country. So it means that there's a lot more risk that if you actually are going to buy this property and rent it out, you're going to end up possibly with a tenant who doesn't pay and you cannot remove them, which means that you're going to have a lot of fixed costs in terms of mortgage, interest rates, insurance, things like that, and you're not getting anything out of it. And so in this kind of environment, I think that stocks in multinational companies is a far less risk, because they are able to withstand the kind of strange environment that we are in. Whereas if you're residential real estate, you put a lot of effort in. It requires an incredible amount of effort actually on a day-to-day basis to maintain it and make sure that it's up to code, everything is going well and responding to your tenants' problems and things like that. Going to court if they don't pay rent, which you can't do at the moment. But I think that this is a time period where I think a lot of people will be exiting the residential real estate market in terms of renting out their properties to people, just because it really is far more work in terms for what it is. You're not going to get much value out of it. And I think this may just create all kinds of unpredictable kind of results that possibly we will never have imagined. Maybe a lot of apartment buildings will be turned into condos, converted and sold. Maybe the number of people who just want to buy real estate to rent it out just declines dramatically, because it's just not a very lucrative environment when you don't know the rules. It changes day by day, and it's very hard to plan in this kind of environment. Investors don't like unpredictable environments, and the reason why people got into real estate in the beginning was because it was a very predictable thing. In fact, it was almost like a super easy business that you couldn't fail at, because hey, there's always the demand for residential real estate, so there wouldn't be a problem. But now it is a problem. We don't really know what the rules are. We don't know how many people are going to be in these cities, if they're going to want to work from different areas of the country that are less populated. Hard to know what's going to happen with that. So that's one reason. If you don't know the future, you can't invest in it. You can't say, hey, that's worth my money. So I will not be putting one dime into residential real estate, especially not this market, which, if you were to actually invest in this environment, you're getting incredibly low yields. The reason it's low yields is, well, partly due to the Federal Reserve having low interest rates, which causes property values to skyrocket. But not only that, part of the reason why people buy these kind of apartments in a place like Beverly Hills, as an example, is because of the expectation of it going up in price. It's not really so much the rent, because you would probably make more money in terms of a yield in a corporate bond compared to, like, say, a Beverly Hills apartment building. So that's one reason why I think you are better off focusing on equities instead of real estate, especially in this crazy market where you have no idea where people want to live, what the rules are, what's going to happen. Let's wait until this is sorted out, and then you can consider whether this is actually a good idea. Now, I actually do own an REIT. Of course, I've talked about this in the past on my channel. It's called O Realty Income. They pay a monthly dividend, but they don't. It's not residential real estate. It's commercial properties that are single use, like it's one building, and also they tend to be Amazon proof. In other words, they do not compete with their tenants do not compete with Amazon. Like, as an example, it's like FedEx does not compete with Amazon, or as example, Dollar Tree, because the low price point is actually a very valuable thing, because people just want to buy something cheap right now, so they go to Dollar Tree, and that's not something that Amazon competes with. So if you need something that pays a monthly dividend, then Realty Income is a good choice. Anyway, let me know what you think in the comments below. Be sure to subscribe, and I'll see you in the next video.